Amrit Kiran Singh, the chairman of International Spirits and Wines Association of India, joins us. He is also the advisor, of course, chief advisor to USL and Diageo. And Abneesh Roy of Edelweiss is also with us. Good morning, gentlemen. Mr. Singh, first, your thoughts. Alcohol is being kept out of the ambit of GST. That's clearly disappointing to you?
No, I mean, the first reason I wanted to say that I'm talking to you is because somebody came up to me and said that, you know, children's milk is outside of GST and is inside of GST and alcohol is outside. How have you managed that? So I just wanted to say that no, we wanted to be in GST for several reasons, and I think they were completely unselfish reasons. One was that the industry, the complete organized sector, the branded industry, not just Johnny Walker, Chivas Regal, Jack Daniels, but also the mass brands like McDowell's, Royal Stag, Officer's Choice and Magic Moments, all of them wanted there to be a larger degree of transparency in the industry. And once you're in GST, there is a huge amount of transparency. And why I'm saying that is WHO estimates that almost 50% of the industry is unrecorded. So that was the big reason we wanted to be in GST. The second reason that we wanted to be in GST is to actually reduce the R&R, because if you look at the retail value of the annual retail value of the organized sector, it's about 2.2 lakh crores. And if you add
Mr. Singh, Mr. Singh, if you can hear me, you know, it is at the moment a little pointless trying to discuss why it is not there, because it is not going to be there. So my point is, what is the downside that you all see? Do you expect to become, you know, the victim of higher taxes now from the various states?
If you would let me finish.
Yep.
And if you add the 1.1 crores, which is unrecorded, that's almost 3.3 crores. And if you look at the whole value of the GST base, it's 55 lakhs. So that's about 5%. And that has a huge impact to reduce the R&R rate. And therefore, we wanted to be there. The third reason, and which is most important, that's why I'm going to answer your question, is that alcohol is the second largest contributor to any state's revenues after VAT. And it contributes between 13 and 30% to a state's revenue. So now, this is a very important source of revenue for a state, and these states have been very possessive about it, and rightly so. It gives them a degree of financial independence. Now, although we are out of GST, we've been in touch with the chairman of the Empowered Committee.
Okay.
And like I said, it's such an important part of the revenue of a state that they want to ensure that they keep getting revenues.
Yep.
in line with what they've been getting in the past and even better. And therefore, we've had very positive meetings with the chairman of the Empowered Committee, like I said, and we believe that mechanisms will be set up that will allow us to offset the taxes that we pay on inputs on the final output.
Okay.
So net we're very positive. We believe that we will be well taken care of.
Okay.
And our initial meetings that we've had with the chairman of the Empowered Committee are very, very positive.
Okay, Abneesh Roy of Edelweiss Securities is also with us. Abneesh, good morning. So, do we see more derating of, say, a stock like United Spirits, or do you think now this is in the price after the kind of fall that we have seen?
So the fact that liquor will be outside of GST was well known, and that's why in the past few months we have seen the liquor stocks correct around 20% United Spirits. Of course, the input raw materials, the tax rates will go up, and also for the costs like rentals and advertising also, the rates will go up, and because it's not part of GST, there will be no set-off. So there will be impact on numbers. I don't think the street has really baked it into the numbers. The rates are unknown. The impact can be fairly huge if there is no credit benefit from the state governments and the liquor companies do not do anything about this, which is very unlikely. So based on current numbers, if you see clearly, there could be impact anywhere from 10% to even say 30-40%. But this is assuming nothing really comes out from the state government. This is the second largest revenue for the states. So they would also like these companies to remain healthy. Otherwise, if you see, the profit margins can fall off significantly. So net, the stocks have corrected. This was a well-known news. This is not a shock. The GST rate is still unknown. There will be a lot of consultations, etc. And of course, state governments will do something about it. So my sense is largely it is now getting factored into the stock prices. And it's very unlikely that there will not be any benefit, and the liquor companies won't do anything about it.
Okay, so are you a buyer in any of the stocks now? Do you think the bad news, if any, is fully discounted?
So we have a hold neutral call on the stock because currently there are other things also which matter. GST is just one of the factors. The other things are which we will watch out will be pricing increase in key states like Andhra, Telangana, these states, etc. Second is, of course, competitive intensity seems to have definitely gone up. Pernod is investing heavily in terms of protecting and even gaining market share. Allied Blenders continues to do well in the mass end. United Spirits has done quite a few successful relaunches, but that's not translating meaningfully into the margin expansion because of the competitive intensity. So net, near-term trigger is not really there. So we have a neutral call. Most of the GST overhang is now largely getting baked into the price.
All right, Mr. Amrit Kiran Singh, Abneesh, we will have to leave it at that because there's this breaking news coming in from Bharat Forge. Thank you very much, both.